Today is 8th of March 2020 and we are on EquityMaster's website. Now in the next couple of minutes our interest would be to tell you what this EquityMaster is and you should buy their service or not to buy their services. Now as you see, there is an offer running currently which is on Rebound Riches. It seems to be the new service under the premium umbrella of services that they offer. They're going to offer or talk about this service in a 1 day, 4 hours, 57 minute and 43 second. So let's look into what's there in this offer and whether you should get into this or not. This service will be talked about tomorrow 5 p.m. but just to give you a hint of what they're going to come up is seeing the crash that happened in the market due to coronavirus. They see an opportunity, and they see opportunity very similar to what was there in the 2008. And if someone would have invested in the 2008 crisis, then there would be a huge interest of 292%. And looks like this opportunity they are talking about is giving you some stocks that has a potential of doubling your money or making 3 times, 5 times or 10 times of your money in the next years. So what this offer is saying is that there is an opportunity in the market as we speak right now. But I would like to tell you other side of the story, what the same company telling to their existing members, which is myself. I'm an existing member of one of the premium services. They have tons of premium services, and I doubt why they do have so many premium services like fundamentals, trading and learning. I'm a member of a double income, and as a double income, Mr. Rahul Shah has launched a new service in the month of October, and it promised that after a certain years, if you continue to invest, and this certain year could be 5 years, 7 years, 11 years, you would generate an equal income from the investments, and that would be in addition to what you are earning from salary, so that you can enjoy your luxury holidays and do whatever you want to do, even though you don't work for your regular 9 to 5 job. Now I really brought up this service because the pitch was very solid and it's very attractive. So this is my page where I'm the member of this subscription, double income. I subscribed in December and last year, and this will continue this year December, and it's a recurring subscription, and I doubt that I will continue after seeing the 5th March issue. So let's go to the 5th March issue. So this 5th March subscription is talking about 3 or 4 key statements. Let me just go there. So what this says that a weekly fall of 7% would result into a CAGR of a 22.4% over the next 2 years if the investment would have been made on a P less 20x. Now on the other hand, what Mr. Rahul Shah is saying is that 7% weekly fall had led to a poor CAGR of 6% if they have been made on an expensive market like P greater than 20x. So according to him, 20x is or above is an expensive market, which I agree to him. The another statement, current P of the market is 23.3x, which is as we speak today. So I agree that 23.3 is an expensive market, but 30x was a much more expensive market than the 23x. So if you go to the past subscription that it started in the month of December, I subscribed in December, but it started in the month of October. So far from the month of October till February, these were the recommendation by Rahul Shah. Now my first question to Mr. Rahul Shah is that if the PE 23 is expensive, then PE 30 is much more expensive, and if so, then why Mr. Rahul Shah has made such a recommendation on 30p when every analyst knows that 30p is much expensive and our growth story is much low. I'm much surprised by seeing this statement. The action to take is allocate 50,000 in one fixed deposit. That's going to be around 6.5 per annum currently. I do not agree with it, because if your advice was to invest in a stocks which is 66% of 50,000 in the last 4 or 5 months when the P was 30, and now when the P is 23 you are recommending not to invest into stock, is a contradictory statement of the whole investment philosophy that you're talking about. Either you should have not proposed an investment on 30x and ask us to park the money into fixed deposit or in a liquid money, and now the market has corrected to 23p. You should have asked to move some of our fixed deposit and liquid money into the stock market and wait for further correction, which I agree with you, the 20x at below would be the right opportunity. So I'm just confused, why did you ask us to invest into a market of 30p when 23p is not attractive for you? Now this is not it. Let's go to another mail that I received from Mr. Rahul Goel, who is the CEO of this EquityMaster, and it's exactly opposite to what Mr. Rahul Shah is telling to the members of EquityMaster. This is a sales pitch again. This is saying that the coronavirus crash or the stock market has opened a huge opportunity, according to Rahul just 2 hours ago. He sees a good opportunity, and he is saying that if we brought a new service, we'll get into access of these 3 stocks, which can make a huge opportunity in a upcoming decade. So you see there is the same organization, EquityMaster. It has one message to existing members saying that do not put into a market currently because it is trading at P23, while it's okay to invest into a market which is 30p according to him. Now contradiction to this is this mail that I'm showing you is talking about and looking this as an opportunity and invest into stock market these 3 stocks. So my question to this whole organization is that why you are not revealing these 3 stocks and asking to invest these 3 stocks to an existing members. You are asking existing members to put your money into fixed deposit. It's very contrarian. Now go and let's see about some of the reviews, and you'll find that what I'm saying is echoing with various other people's. Too many service, too little commitment. EquityMaster advisory not good. EquityMaster is not good. Don't buy. Now I think it is a serious concern that EquityMaster itself is not telling the right message to the retail investors. They have 2 different messaging, one for an existing customer saying do not invest into this stock market because P23 is much higher than 20p and wait for it. I don't know if it comes to or not, and in the past they have told to invest on 30p, while this email for a new or prospect customer they are saying there is an opportunity and you should get into this opportunity. So I leave this video with this confusion, but my recommendation is not to get into EquityMaster. I am already membership and I am deciding to end it by end of this year because I already paid the annual subscription. Thank you for your time.